Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. We all know that house prices are slipping with a rate of decline the steepest in decades, but at the same time, the rental market is getting increasingly tight. According to Domain's rent report for the September quarter, house and unit rents across our capital cities have reached a new record high. So what does this mean for investors, for renters finding themselves priced out of the market, and for house prices more broadly? Dr. Nicola Powell is the Chief of Research and Economics at Domain. Nicola, welcome back to Fear and Greed.
Thanks for having me back. It's great to be on Fear and Greed.
Some pretty big numbers. House rents up almost 2% in the September quarter. Unit rents are up 6.5%. Sort of what's going on in the market and then why the difference between the two?
Yeah, absolutely. I mean, I think, the rental market has been in some pain for a while. We've seen escalating rents for some time. When you have a look across our capital city markets, all of them are in a landlord's market. So it is very competitive conditions for tenants. I think what's interesting over the September quarter is we started to see kind of different trends emerge. So while we were seeing kind of record high house rents through the pandemic, what we're seeing now is unit rents are recovering swiftly from the pandemic-induced dip in asking rents. And what we've got now is unit rents are now surpassing the rental growth of house rents. Across our combined capitals, unit rents surged 6.5% over the September quarter, which is quite a big jump. They're up almost 17% over the past year. So I think, answering that direct question around the difference between kind of the sales market and the rental market, you're right, we've got very different trends going on. And I think there are different factors that are influencing both of those. I think when you look at the sales market, sales are influenced by similar things to the rental market, such as population growth. And there are many factors that influence price cycles. But there is this influence, obviously, of the cost of living and higher interest rates, which are having a bigger impact on the sales market and the softening of prices. But in the rental market, there are some other factors, such as, overseas migration.
Okay. Is there much difference between capital cities? Are there certain, because we know in the housing market, Sydney is particularly dire. Melbourne's not much better, and even Brisbane's come off. So we think about the selling market in terms of regions. Is it the same for rents?
Look, it is pretty similar. I mean, we've got rising rents across all of our capital cities. The only one that really bucked the trend was Canberra. Canberra house rents declined over the 3 months to September. They're down $10, so it is a minor decline. But I think, what that in Canberra, what it has done is it's an abrupt halt to the rising rents that were occurring prior. And I think the difference in Canberra, and look, it's really unusual actually to see asking rents decline when the vacancy rate is still technically a landlord's market and it's still very tight. But what we've seen in Canberra, it's seen the biggest jump over the last year since the beginning of this year of its vacancy rate. So we've seen an increase in available properties to rent, which I think is helping to alleviate conditions. And when you look at the unit rental market across the capital cities, again, largely we've got all of them rising. Hobart and Canberra, were the only capital cities to see steady rents over the quarter. And we're seeing pretty strong rates of growth across all of those capital city markets. So Sydney, Melbourne, Brisbane, Adelaide and Perth all saw quite a jump in asking rents for units over the 3 months to September.
Stay with me, Nicola. We'll be back in a minute. My guest this morning is Dr. Nicola Powell, Chief of Research and Economics at Domain. Nicola, you mentioned vacancy rates. I presume they're low. That's why apartment rents and house rents are going up. What does all this mean for house prices? Because surely there must be investors out there thinking, I'm getting 15% more than I did 12 months ago on a unit. Maybe I should invest.
Look, it's really interesting when you start talking about those gross rental yields, because we're now seeing an improvement in gross rental yields. And obviously that is attractive to investors when you've got that cash flow improving. I think it does depend upon the capital city. I mean, we've got gross rental yields improving across most of them. Some of them have still got a marginal decline. But it's really interesting. So when you have a look at, say, Sydney and Melbourne, the gross rental yields are very low. They're around 2 to 3% for a house and around that kind of 4% mark for a unit. they are improving. And, when you have a look at gross rental yields in Sydney, you can largely deduce that a big portion of investors in Sydney are negatively gearing because of that high purchasing cost. But I think, when you have a look towards some of the other gross yields in other capital cities, they have improved. And Perth is one of those markets that jumps out. So Perth gross rental yields for houses are just over 5%. And for units, they're nearly 6%. Now, this is a record level of gross rental yields for the Perth market. And I think that in itself will be very enticing for investors looking for that positive cash flow.
Yeah, absolutely. And I mean, if that continues, you would think that would put some, maybe not a floor on falling prices, but certainly would slow down the pace of falling prices.
Yeah, you would think so. I think, there are other factors obviously to consider in terms of rising interest rates. And I really think that an investor that is, a seasoned investor, as I call them, somebody that has maybe already in the property market as an investor, I think they've probably been looking for some time. And I think with such strength in the rental market, it gives further reason for investors to be active in the market. And I always think, what's the future going to hold? When you have a look at how the rental market is performing, it is extraordinarily tight. It's a landlord's market. Those vacancy rates are low. And when you have a look at the main drivers of this tightening rental market, in terms of main drivers, I mean the things that have changed. The things that are changing are overseas migration and short-term arrivals. And short-term arrivals includes things like foreign students and tourism. That is going to continue to ramp up, and that is going to continue to place pressure on our rental markets. And I think, well, what's going to happen towards the end of the year when we get to that new university year? An influx of new international students, that's going to weigh heavily on our rental markets, particularly on those areas that are already seeing strong rates of rental growth, that recovery in those rents in those inner city areas around those university sectors. I think, there is going to be some pain for rental prices, particularly in those areas moving forward.
Okay, does this have a social effect when you're finding it difficult to afford rent? That must have a flow on just beyond the property market.
Look, I really think this social effect is an interesting conversation because I think it's already having an impact in terms of decisions from tenants. I call it that, the affordability ceiling. There is only so much a tenant can afford, and they can only face so much in terms of rising rents. And what that does is, once that affordability ceiling is reached, a tenant has to make a compromise. That compromise is either location or it's either the type of property they can afford. And I think that's one of the reasons why we've seen this steer towards the unit rental market, because it's obviously much more affordable. But then there's also this other idea around changing formation of houses. Are we starting to see now people decide to go into house shares if they're able to cut the costs, share the costs, the burden of living? It's not just about rents, it's about rising energy prices, it's about, the overall rising cost of living is really hurting all of our belts.
Yeah, I mean, that's a really interesting aspect to it, because you're kind of saying it's not just about how much rent you can pay. As inflation continues to fly and cost of living rises, people are making kind of bigger picture decisions almost.
Yeah, I absolutely think they are. And I think, we talk about solutions. So what is the solutions of this rental crisis that, is largely across a lot of parts of Australia? And there is no quick fix to the rental crisis. And I think, the sooner we act, the better, because, when you've got big tourism campaigns that are going to be launching to attract tourism back to Australia. We've got an excellent university sector, which makes, it very attractive for international students to come to Australia. And the ramping up of overseas migration as a result of the skills shortage in Australia. We want to attract skilled migrants into Australia. These are all going to place additional demand on our rental market. How are we going to house this additional population? What are we going to do for this tighter rental market, and particularly for low-income households in Australia? I mean, there are many solutions, and I think the sooner that we act, the better.
Is that a suggestion that government should be doing something about it?
Yes, I do. And it's a multi-pronged approach. I think, if we think about low-income earners in Australia, low income households, I should say. When you look at rental assistance, it hasn't risen in line with rising rents over recent years. So I do think we need an increase in rental assistance for those that need it. On the other side to that as well, it's social housing. We haven't built enough social housing, and what that does is it places additional pressure in the private rental market, which is the numbers that we're talking about here. So those lower income households that should be in social housing are facing escalating costs of rent, and they're in this private rental market. That's placing additional demand on the private rental market when really they should be in social housing. And it's other things like, when you think about, say, the build to rent sector, Australia is very much behind other countries such as the UK. The build to rent sector is a great solution to boost the supply and accommodation in Australia. And also, it's things like red tape, it's things like changing land use, allowing us to build more dwellings in those kind of middle ring suburbs to really help kind of boost the supply. And then there's the other side around affordable housing. How do we really help tenants become homeowners? Affordable housing, helping them transition to becoming homeowners, becoming those first home buyers, to help alleviate some of those demand pressures.
It's going to be fascinating to watch. Nicola, thank you for talking to Fear and Greed.
Thank you.
That was Dr. Nicola Powell, Chief of Research and Economics at Domain. This is the Fear and Greed Daily Interview. Remember, this information is general in nature and you should always seek professional advice before making any investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.